Hello dear students, welcome to Devika's Commerce and Management Academy. In auditing, we are discussing about vouching. Vouching introduction is over. In the last class, I taught how to go for vouching of purchase book and sales book. Okay. Now today we will see cash book, cash transactions. How do you go for the cash transactions vouching? Very important topic. In examination, 90 to 95% you can expect this, but very easy to remember. Don't worry at all. See, there is no hard and fast rule for vouching of cash book. Just recollect cash book. When we have studied in subsidiary books, first book was cash book, right? Cash book, how is the cash book? Debit side we used to write all the receipts, credit side payments. Cash book, three types of cash books are there: single column, double column, triple column. Did you recollect it? Same, the same one we are going to vouch. Vouching of that cash book. So what do you write it on the debit side? All the receipts. Credit side, all the payments. Imagine different kinds of receipts and payments. All the receipts and payments, how do you vouch it? Each and every transaction you have to take it. Simple. See the board. Receipts. So these are the general receipts, we find it in the cash book. How do you vouch each and every transaction? That we are going to discuss. In the same way, payments. Payments, different kinds of payments are there. How do you vouch these each and every payment? That we have to discuss. Just 2 to 3 lines for each and every transaction. Explanation is required. That's enough, not much. Okay. Now we'll see first cash receipts. Vouching of cash book. Vouching of cash book means only cash book we are going to vouch. We are going to vouch only the cash book. Cash book first we will focus on the cash book receipt side. Receipt side we write all the receipts only. So these are the general receipts. Receipt side, first transaction, what do you find? Opening balance. Opening balance, how do you vouch? How do you verify? Opening balance is last month or last year. Last month. Closing balance is the opening balance, right? So for vouching of this, we have to see the last month closing balance. Closing balance, balance carried on. Did you remember? So that will be the balance brought down of this cash book. We have to check that one. Suppose this is January 1st, 31st December, balance we have to check. That balance is suppose say 65,000. This should be 65,000 only. In that way we will verify this. And next, transactions, vouching. We need some evidence for all this. This evidence is last year's balance. Now here cash sales. Now credit sales. Credit sales already we have discussed in the purchase book. Cash sales. When you are selling goods on cash basis, definitely there will be a voucher. There will be a receipt you will be giving to the customer. So that voucher, some Xerox copy or you can say duplicate copy. So that you need to check. 1 minute. Okay. So that you need to check. Cash sales. How many sales happened? How many sales are taken place? How much you sold it? So that book you have to take it out, and that you are checking up with the sales book. That is cash sales. How much sales are there? So that vouchers are the receipt, that vouchers we are going to verify for this cash sales. Okay. Then after that, receipt of debtors. For every debtor you will be giving a receipt. Receipt of debtor means every debtor. Debtor means who is the debtor? When you are selling goods on credit basis to some person, he is debtor. Say for example, I have sold goods to X. X is debtor. I have sold goods to X and he is a debtor. Goods of worth 10,000. 10,000 goods I have sold him. Someday he has to return the money, right? Whenever he is returning that will say it as receipts of debtors. Debtor is giving it, paying back. So how much he is paying? How do you vouch this one? For this you need to check the purchase book. Sorry, this is receipts, na? Sales book. Sales book you have to check. In sales book you will find all the debtors like X, Y, Z, whoever debtors are there, everyone is available in the sales book. Sales book we have to verify. and how many members are there, what is the amount, how much we are receiving from them, put a tick mark. Then you will come to know how much is left over. Are you getting it? Just focus. So that is cash receipts from debtors, how much we are receiving from debtors. And bills receivable. For bills receivable, how do you check? This also related to the debtors only. And whenever they are giving us any receipt, any bill they are returning at, so bills receivable note is there. So that note you need to check. That will be working out as an evidence, proof. So we are checking with the bills receivable note. And when they are paying it back. In the same way, share capital. Share capital, how much share capital we are having and how much share capital is returning by the directors. For this, what the auditor has to do is, first he has to check how many directors are there and how much they have taken share and how much they are returning it, and the particular details step by step they have to go ahead. Then they will get to know that exactly share capital how much is returning back. In the same way, loans. So here already we have given loans to someone. Say for example, loan given to P, company P, or a person P, Mr. P, or company name is P itself, P and Co company. So they have already taken loan from us. They have to return it back. When they are returning, how do you watch this? You have to observe loans register. How many loans already we have given, to whom we have given, how much is the amount, and if suppose P is returning, where is this P's information? Then check it out, how much he has taken loan. Suppose 1 lakh he has taken, how much he is returning? Is he returning 1 lakh or is he paying 50,000? Then what about the rest of the 50,000? That will be outstanding payable. So like we have to go for vouching of the loans. In the same way, sale of investments. Investment, sometimes they will be selling it. So whenever we are selling the investment, that's an income you are getting in the on the receipt side. When investments you are selling it, for that you need to check out the investments register. How many investments we have, how much we are selling it, to whom we are selling it. That data you have to check it out. Through that you can go for the vouching. In the same way, sale of fixed assets. To check this fixed assets, first of all the auditor has to go for the authorization of selling of fixed assets. Who is having the authority? Who can sell the assets? Second step, how many assets he is selling it? That authority person, how many assets he is selling it? And what was the price purchased? And what rate we are selling it? If you are selling at loss, then that's a loss, we must mention it. And what income anyway will be writing income, and also loss also should be mentioned. So that everything, each and every step by step, the auditor has to check the sale of the fixed assets. Okay. Next one, income from interest and discount. Interest, you have put some investments in some other companies. So from there you are getting interest. How much interest you are getting it? How much you have invested? That you have to verify first. And what is the interest rate we have to receive? Calculate it. According to that, is it matching with this or not? So that you have to verify. In the same way, discount. Did you receive any discount on purchasing of any transaction, any items, any goods? So that discount also. So everything is with the proof. In the same way, next, what is this? Rent received. Sometimes the company is having a lots of property. So that entire property they may not be using it. They are giving some property for rent purpose. So to verify this, the auditor has to go for the rental agreement. Rental agreement. So auditor has to check this in rental agreement. In rental agreement, that it must have been written clearly. Rental agreement, or otherwise you can say it as a lease agreement or lease agreement. Anyway, whatever it may be. So auditor has to observe this. What is the property given on rent basis? What is the lease amount? What is the rent amount? How many years it is given? How much they have to get it? So according to that, verify this. It's very easy to verify. And in the same way, commission. If at all any commission company is receiving from someone, then commission related to this commission, from where they are getting the commission, what is the agreement related to the commission. So all the details also he has to check it out through the agreement. Last one is that claim from insurance company. Sometimes insurance company is giving you some claim amount, some amount you are receiving from the insurance claim. So how you are receiving it? What is the loss occurred in our company? And insurance claim related entire agreement, the auditor has to check it. That is going to work out as an evidence. Then according to the agreement, whatever is loss occurred and how the company is paying, how much they are paying, and cross checking with the company. Suppose company is making a payment of say 50 lakh rupees, and how much it is showing on the receipt side, debit side, cross check. So in that way they can go for the verification of the insurance claim. So these are the receipts. General I told you. Not only this, if you get any thought like it can be on the debit side, that item also you can include it, and in general how the verification can be done, that also you can explain it. Am I clear? Now coming to the payment side. First thing is that payment of creditors. Creditors means purchased goods on credit basis. Okay. So when you have purchased goods from, suppose say he is say Mr. X, you have purchased goods. What did you do? Purchased goods on credit basis. On credit basis. Suppose say the worth is 50 lakh rupees, 50,000 say. 50,000 goods you have purchased it. When you have purchased means you have to pay it back. To whom? Mr. X. Mr. X is creditor. So when you are making payment of 50,000, so it must be on the payment side. How the auditor has to verify this transaction? Just simply checking out the purchase book. How many creditors are there, he'll come to know. Suppose he is finding here in creditors book, purchase book, Mr. X, 50,000 rupees. Then he is paying to whom we are paying it 50,000 rupees. Okay. So Mr. X is receiving 50,000 rupees from us, payment of creditors, 50,000 is over. Now leftover creditors we have to focus. Are you getting it? From X we have purchased goods worth of 50,000. 50,000 is we are paying to Mr. X. Then that is payment of creditors. Mr. X is ruled out, paid. How many creditors are there? That you have to focus. That will be pending. In that way you can just check this creditors. In the same way, next to loans. Loans is here, it comes on the payment. Payment side means you have taken loan. So related to this loans register, loans documents will be there. That has to be observed by the auditor. How much loan the company has taken. Okay, say 5 crores loan company has taken. Now company has to pay off this loan some amount or full amount. If the company is paying out of 5 crore, 1 crore they are paying. Payment is here 1 crore. Now the auditor has to observe that how much loan is there, 5 crore. Out of that 1 crore is paying. Now left over 4 more crores. So that will be continued in the next years. If 5 crore is paying, okay, check it out. He is paying 5 crore. This transaction is clear. Clear? Are you getting it? In the same way, salaries also. To check out the salaries, total salary, total amount they are writing here. Suppose say 2 crore is the salary. 2 crore is the salary. How do you check this transaction? First of all, the auditor has to take out the list of the employees. How many employees are there? How much is the salary they are getting monthly? How much they are getting? Totaling. That statement he has to get it. That statement which is matching with the bank statement or not, because in the present scenario every employee is getting salaries through the bank only. That no one will pay cash. So that is why salary statement and bank statement both are matching or not. So that is enough. to check the transaction. And also sometimes physical verification also which is required. Sometimes employees are only 10 employees are, but they may be showing 15 employees and the rest of these 5 employees may be manipulation. So physical verification also, if required, he has to go. So that's about the salaries. Next thing comes to wages. Wages means laborers who gets their payment, remuneration. So that is called as wages. Salaries means employees who are regularly working in the organization. Wages who comes on daily wages, daily payment purpose, who's coming to the organization, they are getting the wages. So how do you verify this? There are 3 steps. First thing is that recording time. At what time they are coming, how many days they have come in a month, how many employees are there working on daily wages basis, that is they have to focus. First thing is that recording their time, then after that wage sheets. Every day, end of the day, like 5 o'clock or 6 o'clock, whatever may be the time period, outgoing period, that period they have to prepare wage sheet. The auditor has to get these wage sheets which is matching with the payment or not. Wage sheets he has to verify, then after that payment of wages. According to the wage sheets, payment. These 3 steps will clearly verifying with vouchers of this recording sheet and wage payment, all these things. So in that way they can go for the vouching of wages. In the same way, capital expenditure. Capital expenditure means the amount which is spent to purchase the assets, physical assets. So that amount we say it as a capital expenditure. If company is purchasing any kind of fixed assets from the capital, then that's capital expenditure. How do you verify this? Simple, get the vouchers. How many expenditures we are showing in the company, how many assets we have purchased it. So that vouchers get it and tally the amount, month, date, everything clearly matching it with that. So that would be enough to verify the capital expenditure transactions. In the same way, a bank account also. Bank account also has to be tallied, payment. Generally most of the time, you might have remembered BRS, bank reconciliation statement. In cash book they have written, but in passbook it's not written, or sometimes passbook direct entry, in cash book there is no information. So to find out such kind of transactions, bank account we are verifying with by preparing BRS. BRS, cash book, passbook, both are matching together. Any differences comes, that will be verifying through the bank account. Next, bills payable. Already we have taken some amount, for that bills payables are there. So when you are making this bills payable, what to do? How do you verify this? Simply bills payable voucher book, get it and then see and how much is there in the bills payable book and how much you are paying it. Cross check, enough. In the same way, insurance premium. Every month or every year, according to the policy, the company has to pay the insurance premium. How do you verify? First of all, the auditor has to see that how many insurances the company has taken. Agreement of insurance company with this company, how many policies are there, and according to the policy, what is the payment system of premium payment system. Is it monthly? Is it yearly, once or twice or 4 times, quarterly or half yearly? What is the premium payment system? That he has to understand. How many policies are there? What is the premium payment system? If he understood that according to the agreement with the insurance company, then it's very easy, quite easy to check this transaction. In the same way, partners drawing. Partners drawing, sometimes partners are drawing some amount from the capital. So how do you check this? First of all, as per the articles of association, what are the rules and regulations laid for drawing the amount by the partners, that the auditor has to study. Here what is going to work out? Articles of association. He has to check it. How much eligibility is there? Eligibility, some amount is kept. And when partner is drawing, any amount, on that interest the company has to charge. What is that interest rate? That is also mentioned in the articles of association. He has to study according to that, verify this, close it, that's it. So these are the general payments which you can expect in the cash book. Am I clear? Not only these debit side, receipts and payment side, you can write any other transactions if you find it, like advertisement also. I think it can be written on the payment side, electricity bill, anything you can include it. There is no, as I told you, no hard and fast rule. So how the verification can be done through the Vouching, that is the main criteria you have to understand. Am I clear? Take the screenshot or note down. Are you following? Let me know your feedback in the comment box. And before exams, I don't want you to study throughout the year. Before exam, just revise it. After this class, please take out your textbook and read the same topic. It will be easy for you, you'll never forget. Please do forward these videos to all the students. It's free of cost to many students. Anyone can use it. So I'm taking lots of time and energy, especially for you all. Please forward, use it, study well and have a bright career. Next class we'll see few more topics. Good luck.